Welcome to the November 2008 edition of Practitioners Monthly Video Digest. This 10-part series of continuing professional education modules is designed to keep you current and well-informed on the profession's latest developments. The Taxation series features leading authorities discussing the latest developments impacting the tax environment. Today we're going to talk about recent developments relating to S corporations. Our presentation, including pertinent discussion questions, will provide you with valuable information on recent key developments pertaining to S corporations, including some of the traps that can befall S corporations and their shareholders. And you'll learn strategies to avoid these traps. We'll also cover developments in the areas of officer compensation, excess passive investment income, and interest expense. Finally, we'll cover the basis and distribution rules and delve into the elections that can make these rules more favorable for your clients. Today's speaker is Bob Ranweiler, a principal with Larson Allen in New Ulm, Minnesota. Bob is a regular contributor to PPC Tax Publications and is a past recipient of the AICPA's Outstanding Discussion Leader Award. And now, here's Bob Ranweiler.
All right, welcome back to and I'm going to pull this down just a little bit, to the S Corp update. And we have about 55 minutes left after the setup here. And we will get to our break at 3:30. So I've got an awful lot of material, and frankly, a lot more material than we need to cover. My objectives are pretty simple in this session. Item number one, to cover some of the key federal developments in the S Corp area. And we have had several of them. In fact, there's a couple of them I'll talk about even before we get into the material, the outline material. Item number two is to talk about some unique issues with S Corps, and developing issues are always, I guess, developing issues. Officer comp, the excess passive issue, and if we have a few minutes, the interest expense treatment. The basis and distribution rules, I don't know that we'll have a lot of time to cover, but hopefully we'll have at least a few minutes to go through the fundamentals on those rules of basis issues for S Corps and the distribution rules for S Corps. Before I even get into the outline material, two quick developments that have occurred during the last week. One I mentioned earlier this morning, and that is, as of 2009, as of the end of this year, the automatic extension for S Corps will remain at a 6-month extension, but remember, 1065s and 1041s are going from an automatic 6-month to an automatic 5-month. But we don't have a problem with S Corps because S Corps, basically calendar year, have a March 15th due date. 6-month extension is September 15th. If you extend all the way out, you give me the K1, I still have enough time to do my 1040. The other issue that is not in the material, and I'll just mention it verbally very quickly, is the IRS, I think it was about Thursday or Friday or Monday, it doesn't, again, really matter when, but the IRS came out with guidance on the whole issue of Section 195 startup costs, Section 248 organizational costs, S Corps, and Section 709 development costs in a partnership, as it relates to the statutory change that we had back at the end of '04. And if you recall, that statutory change said, whereas in the past we used to capitalize all costs associated with 195, 248, 709. Let me stay with 248. That's really the S Corp org thing, if you will. We used to capitalize costs and amortize them over no less than 180 months, over no less than 60 months. We had a statutory change at the end of '04 that said the first $5,000 of those costs can be expensed. Now that disappears as your total org costs go from $50,000 to $55,000. Let's stay on the lower end just for a minute here. So in many cases, I form a new corporation, C Corp or S Corp, and the first $5,000 of accounting, Secretary of State, legal costs, things like that can be expensed, but anything over $5,000 gets capitalized and now amortized over no less than 180 months. Well, when Congress changed the law, there was an uncertainty there because literally what they did, if you look at the Internal Revenue Code, the code used to say election to amortize, and they changed the wording to election to expense. So the big question was, if I form a new corporation, do I need to physically make a formal election to take the $5,000 expensing, or does it happen automatically? And what PPC told you in the desk books and what other practitioners have been saying is, until we get absolute guidance, it's probably best to make a formal election. The IRS came out with guidance in the last week that said you don't need to formally elect. If you will, it's automatic. There's an effective date of, I think it's sometime in September, but they say they will not challenge retroactively. Now, if you do not want to expense, but you want to capitalize and amortize everything for whatever reason, then you do need to formally elect. But this is sort of breaking news. So if you miss the election, you don't have to worry about it. You don't have to elect anymore. It's automatic in terms of the $5,000 expensing. So you might watch a little bit more for those regs, but those regs are out in the last couple of days. I briefly mentioned this morning the IRS has given us new relief on late S elections and late entity classification elections. This is, as an example, where I might form an LLC, but I want to be an S Corp. I want to elect entity classification, corporate classification. My recollection is Form 8832, and I want to elect S status. And we had, as you see on the screen, a RevProc that gave us guidance on a late S election, and we had another RevProc on late entity classification election. The IRS has now said that you do that at one and the same time. You file your 2553 along with your 1120S. There's no user fee, and they actually updated the 2553, and I've given you resource material related to that. They keep simplifying the issue of late S elections, and you still need to give a reason or an excuse. My preference is still don't get there. Do it timely, do it right, and then you don't have to beg forgiveness. But they have given us even simplified, more simplified relief if we do miss that S election.